How's it going, traders? Flowzone Trader here, back with a weekly forecast, getting you prepared for the week ahead. So as ever, I'm going to focus on the SPY futures, and I like to look at the EMINI chart. Okay, so we're going to start with a top-down analysis and let you know where I think we're at, what might shape up in the week ahead in terms of a weekly model, and where we can look for some potential buy and sell signals. So let's start on the monthly chart now. We're going to hop into that and we'll work our way all the way down to the lower time frames. So here's a monthly chart, something which probably isn't utilized enough by traders, and I want you to just look at this price action. We have been in a bullish run. This is quite tangible to just be a pullback, and this could be your second leg before an expansion higher. Okay, quite feasible that this is a cup and handle. We talked about it briefly last week for that move up, and it's given more confidence in that since the last week's price action. All right, amazing what a week of price action can do. So we built liquidity here underneath, we built the head, we built the right shoulder, and that would be the neckline. So once we broke out on a monthly chart, it's normal for us to retest the neckline. We talked about this level in here being a potential area of congestion, right? A potential demand zone, and it held up. We dipped down into it into the end of last month before soaking straight back up, and we got that huge expansion candle in the first week of November already, looking extremely bullish. All right, but, and there is a but, do you want to be buying high? No, right? You don't really want to be buying high, especially in this market, right? I'm not interested in being a breakout buyer in this market. So if you're thinking bullish, you're going to need to wait and trade at a good point in the chart where you can have good risk reward. All right, so coming out of this now, I'm going to drop down into a weekly chart. I'm going to start to see how the structure's formed, and you'll see what I'm talking about a bit more. So here on a weekly chart, you can quite clearly see the head and shoulder kind of pattern. All right, there's the head, there's your shoulder, there's the breakout, and there's the back test. Okay, so this level here is pretty much your neckline. So we back tested that, and the hold of that for now is bullish on a monthly time frame. Now technically on a weekly, we are still not bullish yet. We had a good signal, so far it's a good signal candle, but we have not taken out a pivot, okay? And it's important to note that the pivot is quite clearly here, okay? And we have supply in here, which is pretty much unmitigated, okay? And we have an imbalance on this weekly chart, which we have tapped into a couple times. Right in here, okay? So we've got an imbalance inside a supply zone, and you also have this old block as well, which we moved down from, this block here. So lots of reasons right now to think we're coming into a lot of resistance, okay? On top of that, if you watched my video yesterday on how to use anchored VWAPs, you will know that we are at a rejection point here. We are at an anchored VWAP. So we held this low here, this anchor here, and the all-time high. We held these levels, but there's a bearish anchor currently holding us down. There it is. I'm going to do this as red just so you can see it. So right now we're quite clearly at an interesting level of potential resistance and supply. Okay, so there's the bearish anchor. All right, so in terms of where we want to buy, do we want to be buying into supply and buying into potential sell signals? Quite clearly not. All right, that's how you get trapped chasing the market. The same as down here, shorts got trapped trying to short lows and they felt max pain. If you are going to be a buyer up here, you are asking to get trapped in the market. So please just consider where we are. We have done a extremely big move in terms of sigma, like all the way from, you might as well call it 4100 to 4400. That's a 300 point move in the space of a week. I'm not interested in participating as a buyer up here. Now, that doesn't mean if structure changes that I won't participate. If we start to chomp our way through this and pull back and hold, yes, I'm going to be looking for buys for the continuation, okay? Absolutely. But I'm not going to buy into this level here because we're coming into big supply areas and we can just flush down. Do I think we're going to flush down like that? No, but I do think a pullback is highly probable soon. So it's all about timing that pullback, understanding where resistance is. So on a daily time frame, what can we look at? Well, again, the same as the weekly. We know this level here is going to be massive, all the way up to 44.33. I say is a very big, interesting area. Now, if they're going to do just a back test and look for the bullish move up, they might do this move here and look for the continuation. Because again, what have we got there? We created this liquidity. Okay, so if bulls are going to hold this level here is going to be absolutely key. Okay, to build the liquidity off. So I'd say realistically, given where it is, almost all the way down to 4,200. But based on this liquidity, 42.25, you might as well call it, up to 4,300. All right, bulls will try to hold that. That's going to be a very interesting level coming into this week and potentially the week after, depending what we do. So that's an area that I'm going to look at. So actually, let's mark that out and leave that in as a potential bullish structure. So I'm going to put that as blue. Okay, so just to confirm, in case you can't see it, here is a potential left shoulder. Okay, for me, this was confirmation, okay, that it was a key level, because they tried to hold that level on a double bottom, they failed, they come underneath. Now if we come back in, we can potentially expand. So that's what I'm potentially looking for if bulls are going to take control. The other thing we need to consider are the fibs, like where are we in terms of values? So if we go from this high that we put in down to the most recent low, you will see we have just come into premium. We're just above the 50%. There is a little bit further to go to get to these fibs. So if we are going to just continue up, I'm very interested in these golden zones to see how we do that. We still have this imbalance here. It has been mitigated, all right? We have tapped into it a few times, but there is further imbalance above on a daily, okay? And of course, we're now back testing this area. So same way I said we need to back test here if we're going to be bullish for that possible inversion of head and shoulders, is the same as here. Okay, so we're coming back to back test this, but this won't be the first time, it's the second time. So what do we say like after the first time? The first time is what we call fresh. Okay, the first moment we move in is fresh. We know there's fresh supply up here. It is not so fresh now because we've dug into it before. So the reaction will be important. Are there still sellers up here? Is this anchor gonna hold? Are these golden zones gonna hold? These are all things that you need to be thinking about, okay? I'm just gonna dive down a tiny bit lower into a 1 hour. Now, what am I thinking? If I'm thinking short and I'm looking for that rollover into here, I need my lower time frames to start agreeing with me. So what can we look at? Obviously, we can look at trend. There's a couple trends on here which we consider where we might pull back into. And you can also think about tapering. Now, I really like this liquidity that we've built on the 1 hour. All right, and this is what I'm always looking for. Quite clearly, we've built some nice liquidity in here and here. So if we start to fail here and make a lower low into a lower high, I'm going to look to see if we can use this liquidity for the move down. All right, that's what I'm very interested in. I'm also well aware that we have some extremely large gaps on the chart. Okay, now these aren't going to show here as much, so I want to just pull them over onto the SPY. Okay, you'll see on the SPY we have some huge gaps on the ETF. So what does that mean? That means during the London session and Asia session, where volume is much thinner, okay, we left the market moving up, constantly moving up, and it's that trapped the shorts underneath. Okay, that's why we got this giant short squeeze up. So that also means I know that we have some major issues, okay, in here, because these gaps will love to get filled because it's very thin in here. So I'm going to be watching the ETF this week. Okay, I'm going to be watching the ETF, and you'll notice this gap right here lines up with that exact level that we talked about the back test coming in. So what am I thinking? If we show a willingness to do a pullback, all right, to stuff against this level, okay, then I'm going to be thinking we can at least close this first gap, all right? We can at least close this first gap. And then it's all about does it want to move down and do the back test? Does it want to back test this shoulder and close that gap? Gaps love to get filled. Now, it is possible, although unlikely, that if all this was a giant squeeze, that we can do a massive move. I'm not going to say all the way back down, but a deeper move back down. Now, I still think this level here is going to be key. This is where it's going to want to come into this gap. It doesn't have to fill the gap. It doesn't have to test the whole neck, all right? It could just come down into this area here. So I'm going to think about these areas when I'm trading ES, all right? It's going to be important to understand where these gaps are when I'm trading ES. Okay, so in this 1 hour chart now, how can I use those SPY points to help me? Okay, we briefly talked about it yesterday. We can go into the sessions and go to regular trading hours. There, bang. These are the ETF gaps, okay? This is the same gaps that you're going to see on the SPY, but it's showing now on the futures. So these become really, really crucial levels for me. Why? Because there's no volume in here, okay? We don't trade thick volume overnight. Okay, so those move ups were thin. So I know there's a good chance the market needs to repair these levels, all right? So I'm going to do these into white boxes. And then afterwards, I'm going to clean up this chart a little bit because a lot of this I don't want to see day to day. So there we go. There are the gaps. Now, you're going to start to see how I like to trade. I've always talked about it. I talked about it extensively in the video yesterday. I have my system that I trade, but I look for areas of confluence where I think the market might want to draw towards. So what do we have here? I just want to point this out. We have this liquidity we talked about, okay? So we're thinking that it might want to back test. We have this area of demand, okay? Demand here, flipped it, turned supply, gapped straight through it without testing it. So it's probable that the market will want to test that level to make sure the structure's good, all right? And in doing that, it's going to repair this thin structure here where there are gaps. So what do we have? We have demand, we have a gap, and we have potential trend, okay? So I'm going to look to see if we can come down into this area. Now, on top of that, if we do a fib from this bottom that we put in to the current high, you will see that a 50% retracement back into discount is into this demand zone and would repair the gap, okay? Now, it doesn't have to happen this week, all right? I want to stress that. The market will do whatever it wants to do, okay? We are just building thesis to be prepared for these moves so that if it does offer us the opportunity to get short, we have some potential targets. The first one would be this gap fill, the second one would be into this area of demand and the potential gap fill to then rebuild the liquidity. And then we're going to wait. We are going to wait to see if it wants to rebuild this for the move up, or if it's going to use this liquidity and dip buys come in and flush them out and just continue lower. It can still continue lower, okay? This doesn't have to be a huge start to a bull trend, okay? It doesn't have to be anything, and I really want to emphasize that so you understand, okay? Unless you're a swing trader and you're looking for these huge moves, if you're playing intraday or even over 2-3 day periods, there is enough of a move in here to pay yourself very, very handsomely, okay? And the same if it expands up and bases like we talked about. You don't need to be swinging for the fences, right? This move here would give you from 43.80 pretty much, and the close of the gap 42.60. Let's just call it a 100-point move. That is more than enough juice to get you paid, okay? More than enough. So that's what I'm thinking about this week. Can we do that move? Now, what does that look like on a weekly model, okay? If you know how I trade, you know that I trade weekly models. So as always, I'm looking for a Monday, Tuesday, high of week or low of week to be set. And then day 3, what we normally get is a failed breakout, return into range, or we get a full breakout. So if we just think about the days, all right, I'm going to draw these out for you, what my weekly model looks like. So we'll go over what happened last week so you can see it's still a valid model. So we had Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so last week what did we do? Right, we did this. Monday, Tuesday, Wednesday breakout, Thursday breakout, Friday breakout, and then we came back in a little bit, right? Is that weekly model valid? Yes. Why was it valid? We left Monday low of week, all right? We never violated the Monday low of week. That stayed in play. That's the rule. 80% of the time, one of them will be the extreme of the week. It just so happened we set it on Monday. So what could we be looking for this week? All right, there are a couple of scenarios that we could be looking for this week. Remember, we're starting high and we started tapering off. So we could do a little move where it traps up, moves down Tuesday, moves down Wednesday, breakout shorts come in before returning back into a range. Quite possible, leaving the Monday high in. Let's just get rid of this. What else could we do? We could do a Monday move down, Tuesday lower week, Wednesday failed breakout, return back into range. We could do a chop week. What else could we do? We could do an extreme push, like a Monday push and a Tuesday retest before coming down, and a Wednesday breakout Thursday, Friday, maybe Friday returns back in. Right? All these are valid and all these work based on where we're currently at, okay? So I'm more interested in the market once I see the price action develop, okay? We are at areas of supply. We have liquidity sat above here. I would love a pullback week. There's no doubt about it. That's what I'm looking for. I'm looking for the market to give back some. So a push up, okay, a failed breakout would be ideal. Why would it be ideal? Because I think longs are now trapped. That's the kind of move I'm looking for. Why do I think longs are trapped? Because people are greedy, okay? Shorts were trapped down here. Smart money, all right, institutions were long in here for this expansion up. You will see we started tapering off into the end of the week, okay? So it's feasible that we can do a failed breakout, get some more longs into the market, okay? Use their liquidity before turning back down into range. It doesn't mean we have to dump. It just means we're turning back down into an area where people might be slightly more interested in getting a good value long. That's how I like to trade, okay? I want to trade short at the highs. I'm not guessing tops, all right? I'm going to need this structure to be put in to get short. I'm not just going to pile in short here. On a lower time frame, I need this structure to take the short back down. And then I'm covering. Where am I covering? Where potential demand is, okay? That's what I'm looking for. The alternate is a fairly aggressive move down early week before bouncing back up. Now, I don't think we do that just because the range is so big, but you know, we had huge range last week, so who am I to say that? Maybe it happens. That's what I want to prepare you for, okay? That's where the liquidity is lying, is in here and above here, okay, and is down here. You don't want to diddle in the middle in this range, okay? This area here, when we get back into here, you need to be looking for just continuations, and you need to be very cautious on your sizing, okay? You need to be cautious of your sizing and follow trend. But for now, I will reiterate, the monthly is bullish, but the other time frames are bearish. We are still in a downtrend, all right? Some people will do this differently, but we are still in some form of downtrend. Now, we've peaked above it, okay, but there's nothing that says, and we did it a lot last year, we can't take this liquidity before moving back in. If we hold this area here, we are looking far more bullish, all right? If we hold that blue area there, we are looking far more bullish. So that's what I'm looking for. I hope it helps you. How am I going to be finding these? I'm going to be using lower time frames, okay? I'm going to be using my flow zone system so I understand when we're starting to get weak. Okay, I'm going to be very interested in these daily SMA levels. So if we take the flow zones off, we can see these daily levels. Right? We are currently trading under or around the 50 key level here, over under. If we start getting heavy at there, we're going to draw towards the 20, and we're going to draw towards the 5-day and the 200, which are stacked together, which are also in the gap again. Confluence. It's what I'm looking for in the market all the time. Confluence, confluence, confluence is what will give me confidence to get in and out of my trades. Okay, so we're going to look for a lower time frame structure to let us know whether the market is going to do a continuation trend or ideally that pullback leg into here, and then we're going to have to wait and see what happens after that. Are we going to be bullish and flip all the time frames into a bullish structure, or are we just going to keep trending down and this could be one giant trap that trapped all the bulls? Quite possibly. We don't know, and we won't know till we get there. So that's what I'm looking for, and I'm going to use my anchors to help me get there. And I'm going to use anchors as my confluence. Okay, so all the time we are holding these key levels, and I will do these off like the Jerome Powell talk, and I will do them off NFP. All right, once these start to fail, I know that we're going to come back inside, all right, because I know then that the buyers are out the market and the ones that are left are underwater. All right, so I'm going to post that video lesson on how to use anchors underneath here, okay, because I think they will come in very useful for you this week. So a recap this week: my ideal scenario, a failed move up Monday, Tuesday, a return back into range for that short, back down to fill these gaps, to come and retest the EMAs, to come and retest the anchored VWAPS, and then we'll see where we're at next week. So for this week, hope you're prepared, trade safe, use stops, don't oversize.